Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only.
Hey, everybody. So quite a bit of drama today in markets and in the White House, of course, with Zelensky and Trump and Vance really kind of in a shouting match, trying to figure things out over there. Zelensky left in anger, so that's not a great sign. But markets are kind of taking it in stride. We see the S&P rallying towards the highs of the day. So we can see that we're kind of getting, we're still pretty far from that 10-day. So we definitely have a little bit of work to do, but if we can get into the zone again, which is where we kind of bounced off of before finally succumbing, I think we still have a chance still at 5,800, but maybe we can get up into here. But make no mistake, that could be a selling opportunity, could be a place to maybe pick up some protection and kind of fade that a little bit. Here's the QQQ. Really not looking great. I mean, some of those stocks like Microsoft are looking terrible. Nvidia with a tiny, tiny little dead cat bounce. Not really anything interesting there. I think it's getting to some sort of compelling value, but there's always a difference between value and fundamentals and really the sentiment that's out there. And right now, they just want to sell these things, even though the SMH has come off quite a bit this week. It's just an ugly, ugly sector. So I'm not sure I want to get super, super constructive on that. Let's take a look at some flows here. So equity CTA, so commodity trading advisor. So that's basically, it's not commodities necessarily anymore, but it's just kind of a lot of systematic strategies. And then you've got vol targeting as well. So in a flat tape, so the problem over the next week is in a flat tape, you've got big sellers. In an up tape, you've got still selling, not as big, and then in the down tape you just get some more snowballing effect to the downside. So and the leveraged ETF products starting to kind of crest and come down a little bit, of course, because AUM has to come down, but there's been massive selling from leveraged ETFs and inverse ETFs having to sell this week on those really ugly days towards the close. So that exacerbates the movement down there. Remember, we call that synthetic short gamma. So it's not the sort of typical short gamma that you see in the listed market where dealers are potentially short some downside puts and have to chase on the way down. There's all kinds of this stuff going on, and it's bigger than ever. So it is a kind of a big deal right now. So the market's going to have to work its way through that. And look at how kind of frothy things got. This morning I showed you in a video how gold really got quite a bit frothy. You know, the GLD with the record inflows into that thing. So that's usually a sign of a little bit of too much FOMO and exuberance. Retail purchased equities for 28 straight days from Jan 10th to February 20th, 28 straight days. So this is something that's going to have to unwind a little bit, and we're starting to see that, right? Friday, Monday especially, retail really hitting the sell button, and we had the fastest 5% decline from an all-time high for the NDX since 2020. So this is kind of a monumental week, which on the one hand kind of makes me feel that we're a little bit oversold, and we do have a little bit of bouncing potentially to do, but I worry that it's not. I mean, I think for me, if the market gets kind of anywhere near 6,000, I'm going to be sort of adding some more protection. So yesterday, Goldman Sachs trading floor finished down 10%. Long only is down 4 billion. Net sellers, so a lot of sellers, hedge funds. Balanced, but net sellers in healthcare and staples versus buyer of tech and communication services. So remember, for many months there, the hedge funds were actually kind of offside. They've been really selling tech for a long time. So a little bit of an unwind there, not necessarily a sign of a big kind of monumental change in what they're doing, but a little bit of an unwind to what they have been doing lately, sort of getting back into some of the out of some of the defensive type stuff, and then back into tech. We can see here CTA positioning. So that's these sort of systematic strategies that have to kind of follow what markets are doing. They have their triggers, so there's a big trigger at 60.45. When we broke down there, they've got to start selling equities. And you can sort of see here, this is the S&P, and then eventually the S&P goes up, CTA buying goes up. S&P goes up, CTA buying goes up. Here we can see the S&P coming down and CTA selling just kind of coming off, right? So in theory, there's kind of more selling to go, which really kind of matches up with what we're saying here, where there's selling to the upside on pops, which can lead to pops and drops, right? The market pops up, and I think those shorter term moving averages are quite powerful in there. The 9-10-day EMA, maybe if you're looking some shorter term charts, I think you can respect those upside moving averages as resistance a little bit more given the backdrop in terms of flows, right? This is kind of ugly stuff there. You can see selling no matter what at the moment. Out there, we've gone in pretty kind of interesting. People just plowing money into stocks like we haven't seen in a very long time. Yet bearish sentiment starting to really take off. So confusing cross currents out there right now. Now, from the positive, right? Because I always like to talk about the good, the bad, and the maybe. Well, maybe we just need to get through the first half of March. So I think, and that's a couple weeks yet. So it's not like, that's around the corner necessarily, but we've got a period where generally it's positive in the first half of March, but of course this March might be a little different. But typically starting around, what do they call that? Pi day, 314, you start to get a little bit stronger performance out of there. So, you might be able to hang your hat on that. Look at this, record inflows into gold. And sure enough, gold is falling off a cliff a little bit last few days, last week or so, and then record outflows from crypto. So we saw crypto underneath 80,000. So that I've been talking about that actually for about 6 weeks. I've been saying on a couple shows, just saying, this is an area that can really give up a little bit. It kind of fooled me a bit. We kind of pushed towards 110, but ultimately we did come down below 80,000 on Bitcoin. Maybe this is a chance to sort of consider kind of, out of gold back into crypto, some sort of pair trade like that, because crypto's been sold off pretty hard, given up pretty much most of the Trump bump. Inflows into Europe, if anyone cares, massive flows into Europe. So if that kind of stops, maybe we can see that money rotate back into the US. So a little on flows there. Hope you guys enjoyed that. We'll see you in the next video.